Hi all and welcome to another edition of our weekly report for the week starting Monday the 30th of December. We have a shorter week ahead of us due to New Year holidays. The week will start with a quiet economic calendar on Monday. On Tuesday, we should be on the lookout for China manufacturing data and US consumer confidence figures. Going forward, global financial markets should remain fairly quiet for New Year's Day holiday on Wednesday. On Thursday, the main point of interest is reserved for China, Eurozone, UK and also US manufacturing PMI data. The week will finish on Friday with German employment rate, US ISM PMI data, crude oil inventories and FOMC minutes report. Now, let's take a look at few markets. This is the end of day price chart for euro-dollar currency pair, and the currency exchange rate was downtrending quite nicely up until recently towards the end of the last week, and then we saw this a spike and a move out higher. The breakout above the key trading level at one spot a level was a trigger, and currently the 200-day moving average at 111.35 is also offering some level of support to the downside. So looking at the price action going forward, as long as the price stays above 111, 110.60, which is this maroon line here, and the cluster of 20 and 50 period moving averages, and also the falling resistance trend line, therefore the breakout level. Bulls appear to be in complete control, potentially looking for an extension to the upside, targeting 112.50 resistance, 113, above that 114, which would be referencing this high here from 24th of June of 2019, and lastly our tree in pivots, which is 114.46. Alternatively, if we see a dip lower and a loss, the end of day close below 110.60, that would negate this as a false breakout or a fake out, potentially looking for a retest of that level from underneath as a newly found resistance. And that would potentially trigger an extension to the downside, therefore reverse the trend, targeting 110, which is the cluster of these two previous lows from the end of November, 109.40, 108.60. Cable volatility was quite visible. This breakout level here at 129 was the one that we got just before the election results, and now we are seeing a retest of that level from above as a newly found support. So the key trading level going forward is at 129 for anybody trading cable or sterling dollar. Bulls appear to be in control above that level, potentially looking for an extension to the upside, looking for a resistance at 132, 133.30, possibly 134.80, 135.30 on the upside. Alternatively, if we see a dip lower and end of day close below 129, that would change the outlook, potentially opening the way for the retest of this additional downside supports towards 128, very close to our 200 period moving average in daily, 126.80, possibly even 124.60 to the downside. Dollar Japanese yen is coming to a major level of resistance, currently capped by 109.50, which is the third touch of this falling resistance trend line. This current price action appears to be forming a rising wedge. They have the tendency to break to the downside, but if we see a breakout higher and the end of day close above 110, retest of that level from above as a newly found support, that would appear to be quite bullish, potentially targeting 110.80, 112, which is the cluster of these two previous highs from 1st of March and then also middle of April. Breakouts above that 112.60, possibly even 114. 114 on the upside as well. Alternatively, if we see a dip lower and end of day close below 108.40, that would change the outlook to bearish, potentially opening the way for a retracement to the downside, targeting supports at 107.20, 106, 105.40. Gold, finally, gold bulls are seeing a bit of joy here. We are seeing a breakout above that 1480, 1475, 1485 level that we were talking about over and over and over again. And the current price is trading above psychologically important 1500, 1511 at the moment. So bulls appear to be in control. If we see a pullback from the current levels into 1485, so a pullback to 1485 and a rally from there, that would be considered to be quite bullish. Potentially targeting resistances on the upside at 1526, 1533, 1546, 1555 on the upside. Alternatively, if you see a dip lower and end of day close below 1475, that would change the outlook fairly quickly to bearish, potentially opening the way for a dip lower towards 1450, 1434, possibly even 1400 to the downside. Lastly, let's talk about crude oil. Crude oil also saw a nice and bullish breakout higher above psychologically important $60 per barrel. So we can draw two different trend lines, one which is based on the closing levels and the other one which is based on the wicks. Either way, the key trading level is psychologically important, $60 per barrel. Currently trading at 61.65. Bulls appear to be in control above 60, so pullback into 60 and a breakout higher would appear to be quite bullish, potentially targeting these current highs here at 63.20. Above that we have 64, which is a cluster of these highs from May time, and then 65.30, 66 on the upside. Alternatively, if you see a dip lower and loss of 60, retest of that level from underneath as a newly found resistance would then open the way for a deeper retracement towards 58.15, possibly 57.80, 56.15 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.